Okay. A very good afternoon, everyone, and welcome to the very first talk of the Shelf Knowledge series. Whenever the salary gets credited for any young professional, the tax deduction becomes the only sad part of the happiest day of their month. Managing the same so that you always are paying optimally is extremely important. Hence, to give you the cheat codes for managing taxes like a pro, we have Mr. Lalit Valecha with us. Mr. Valecha is the founding partner at
Okay.
Ahuja Valecha and
A very good
Associates, a
afternoon,
chartered
everyone,
accountant
and
firm
welcome to the very
based out
first
of
talk
Pune
of
with
the.
offices in Dubai and Bangalore. He has worked on diverse engagements with global companies headquartered in various countries like USA, Germany, UAE, and Singapore. He is a financial advisor and plays an active role on the advisory board of many Indian startups. He has also worked with a lot of micro VC firms, including Better Capital and Multiply Ventures. So, without any further ado, we would like to hand over the reins to Mr. Lalit Valecha to take the session forward. We would have a Q&A session after the talk, so keep dropping your questions in the comment section. Thank you. Mr. Valecha, we would like to take you forward with the session.
Thank you,
Thanks.
thank you, thank you, Vishwas. Thank you for having me here, and happy New Year. It's a new financial year that we're starting on 1st of April. Before that, okay, so we'll break the session into three parts. I know I've got limited time, but I'll try to do justice within that limited time, giving you a brief overview in terms of how do you plan your taxes and also your financials. It's not just related to the taxes because a lot of these things also relate to all your long-term planning and many other things. So we'll break it into three parts. So first part, I'll try to cover people who are salaried and are working as a professional in some companies and elsewhere. Second part, I'll cover professionals where people are working as a freelancer, consultant, contractors in other places. Third part, we'll try to cover some aspects if you want to have your own venture where you want to raise funds. What is that you need to do from a compliance perspective? Now, coming on to the first part in terms of salary, as Vishwas rightly mentioned, that everybody's kind of looking at their salaries, and when they look at TDSs, that is something that is worrisome. Uh, we get that very commonly and very often, that how do you plan that? Is there any way can you optimize? There are multiple ways. The first very simple one, you need to choose your tax rate, as in there are two tax rates that are available. One is a new tax regime and one is an old tax regime. Now, talking about the latest budget that just got enacted just yesterday and the announcement that happened on 1st of Feb, if you're going for the new regime, a salary up till 7 lakhs, you don't have to pay any taxes. You don't have to do any saving, nothing. You just simply select for the new regime and there will be no tax withholding if your salaries are up to 7 lakhs of rupees. So very simple. You don't have to do high level of planning. And then you can do all your financial investments and planning the way you want. You're not dependent on your tax planning in that aspect. Okay. Other thing, while you're also having income, say beyond 7 lakhs, but if you still want to save taxes, I'm just giving you a hypothetical. I'm just taking an example of say 12 lakhs. Okay. Now there are two options. Either you can pay under the old regime or new regime. Okay. If you're paying under the new regime, 12 lakhs of salary, you would have paid 90,000 as taxes in the year. This is the slabs and the benefits that are available. Now, under the old regime, assuming you've not made any investment, you don't have an HRA, you've not done ATC, you've not made any ULIP, no PPF, nothing, just very plain vanilla, what salary that you got. So on that, your taxes will be 1,97,500. So if you're not making any investment, the new regime is far better as compared to the old regime. So it's a very easy choice. But if you're making investments, like if you're maybe you're having a home loan, you are having children for them, you're paying education, maybe you're depositing some PPF, or you have a HRA that you're paying. Supposing ATC that you're claiming is around 1,50,000, house rent that you're paying HRA, you're claiming about 2,50,000 of that, and you're depositing 50,000 in an NPS, which means you're totally saving up to say 4.5 lakhs. In this case, your tax rate, the tax amount will be 87,500. Okay. So it depends in terms of what's your savings versus what's your income and what is the better choice when I look at new regime versus old regime. Now, by default, from 1st of April, what the government has done, new regime is your default tax rate. So now if you want to go for the old tax rate, you'll have to inform your employer that, boss, I'm going for the old tax rate. These are the investments that I have. And accordingly, the tax withholdings will happen. So you need to plan in terms of how you're going to plan your structures. Now, even when you're planning savings, you need to take care of many things. Otherwise, what we've seen, just for the heck of getting tax saving, people are just depositing money anywhere, okay, without even bothering whether the returns are good or not. Okay, so you need to plan it, and you should also see your liquidity. Like, see, there are many things that are automatically there. Like, just giving a very classic example, like if you are already working as an employee, PF will be deducted. So automatically on PF, there is an ATC that is already eligible. So that's an automatic deduction. Now, if you're married, you have children, they're going to school, Their school fees is automatically available as a deduction to you. So capture all of these things. Uh, Obviously, if you're not staying in your hometown and you're working elsewhere, HRA will also be there. So these are things that you need to see in terms of what I have versus whether it is still better to go to a new regime or old regime. Many times I've seen people deposit in insurance schemes. Many times I've seen deposit in mutual fund, which is ELSS, without looking into it whether it's a good product, good return, liquidity, all of those things. So when you're planning taxes and making deposits in certain schemes which are kind of obligatory in nature that you have to contribute every year, and if you don't, then obviously it also lapses and you don't get the real benefit. And you forget about those investments then later on. So you're wasting your money. So don't do that. Plan your taxes very well. Plan ahead in terms of what are the instruments that I will deposit and keep track of it. So many times what happens is we make multiple investments without actually keeping any track of it. So tracking your investments, where have you deposited, whether it is performing or not performing, whether it has a liquidity or not. Like supposing somebody goes in for PPF, like a very classic instrument, deposits there. PPF has a very long-term lock-in period. You cannot withdraw simply. If you deposit in a fixed deposit scheme under ATC also, there's a 5-year lock-in. But if you deposit under ELSS, it just has a 3-year lock-in. So things change. So you need to choose. Insurance is again is a long-term commitment that you need to manage. How much is the insurance do I need? Okay, and whether it's a right product for me. Now, having insurance is the first thing that anybody should do. As in that's very common. You should maybe your employer is already covering you as far as the Mediclaim is concerned. That's fair. But it may happen that 5 years down the line, you may start your own venture. Your employer insurance is not going to cover you. So sooner the better. So it's better that you start your Mediclaim personally also at an early age. You can always top it up. You can increase the amounts out there. That's fair. Because if you have an objective that, hey, I may take a job maybe for 5 years or 6 years, and then after that I will start my own venture, go for the Mediclaim also. And Mediclaim also gives you a tax benefit. So choose the right product, have the healthcare insurance, have the medical insurance, and then plan accordingly. I think so. Don't directly jump into saving taxes. There are multiple options available because the new regime gives you the optionality even without saving. See why I focus more on saving again, which was very very clear, is that uh, any amount that is saved today will help you work lesser tomorrow. Okay, whatever you accumulate over a period of time, you'll be able to retire early. Okay, and you can enjoy whatever you want from that. That's fair. As in, I've seen people take sabbaticals. I've seen people go 6 months sabbatical, travel where you want. Okay, pursue your passion. Okay, so all of these things. How do you do that? How do you get that financial freedom? It comes through savings. I think that's point blank. So there is one rule, as in it's not a thumb rule, but it's a prescribed best effort. If you can do that, it's 50, 30, 20. Okay. Now this defines it's a rule between needs and wants. Okay. Needs is something that we have to spend roti, kapda, makan, very, very simple thing. Okay. Basic stuff. So whatever you're spending on the basic stuff, 50%, it should not exceed 50% of your salary, whatever you're getting, allocate 50% for your basic needs. 30% should be your saving, which is for future benefits. Could be if you're not married, maybe for your marriage, maybe your children education, your retirement, anything. And it changes with time. As you're growing in age, it changes with time. And also retirement is also very important if you start early. Okay, so this 30% is a very critical bucket. You have to demarcate that 30% of your salary that I'm going to save, okay, and in good instruments which are going to give me good returns. 20% you can spend on your leisure, mobile phones, travel, maybe a big car, whatever. So these are wants. Okay, so don't allocate more than 20% in wants, 50% in your daily needs. If you're able to save there, then maybe you can push it to your wants also, but at least 30% saving should be there. So the thumb rule is if you're following 50, 30, 20, it's a very good principle. Has been followed over the years as a good financial planning tool, which will help you kind of multiply your money. Other rule that you need to remember, say, I see a lot of professionals even take home loans. You're getting tax benefit even for home loans, like you get an interest deduction, the principal repayment deduction is also available. But don't take home loan buying a second property just for saving taxes, because there are limitations out there. You'll not be able to claim interest deduction any which way beyond 2 lakhs rupees, because that's the upper cap. Even for the salary deduction, you can't go beyond that, even if you rent it out. So there is an upper cap, just remember that. Second, property rates are not appreciating as much. So if you're investing in an asset class, identify an asset class that gives you good returns, or look at good locations that you know that it's going to appreciate. Okay. Or look at properties which have a good ROI. Like you can invest or co-invest in commercial properties, which have a better ROI. They give you a return of maybe anywhere between 6 to 8%, depending on the location, depending on all those things. But if you buy a residential property, any place in India doesn't give you any return between maybe 2 to 3% is the max. If you go to Bombay, it's worse than that because the rentals are not very high and your property rates are very, very high. So remember this kind of thumb rule that don't buy a second property just for the mere savings taxes. If you're okay, if you need a house, that's fine. You can always buy a house. You can even do without a house because if you're not sure in terms of where you're going to be, because I see a lot of the young professionals be mobile, as in sometimes they're in Bangalore, Mumbai, Gurgaon, anywhere. So identify where you want to buy. See appreciation benefits. I think that's very important. Home can be near to your parents also. That's fine. So there is an emotional attachment to that. But other than that, if you're investing anywhere, look at good returns. I think the only criteria for investing in real estate will be good returns. There may be some tax benefits from the interest part of it. Now, even when now there is one question that arises that's a very good financial tool. Is there any way that I can cover my interest portion by making some investment? So there's a thumb rule. If you deposit 0.1% of your loan amount into an SIP, which pays you anywhere between 15% or slightly more than that, you will be able to cover all your interest. Okay, one classic example, like supposing you've taken a home loan of 40 lakhs. Okay, 9% is the interest rate that you're paying. It's over a 15-year tenure that you're paying. Overall interest that you would have paid would have been 46 lakhs over the tenure of the loan. Now, if you just deposit 0.1% of the 40 lakh amount, which is 4,000 rupees a month, in that tenure, you would have deposited 9 lakh 60,000 in the tenure of the period. Okay. Now, if it gives you 15% return, the overall bucket of this investment would have been 59 lakhs in the year of maturity. Okay, which means after you minus 9 lakhs, you would have earned an interest or return of around 50 lakhs, and your interest is 46 lakhs what you paid on your home loan. So automatically, you're getting the best benefit of the home loan interest also, that you're able to offset it, and your investment is such that it's covering your interest portion. So you're not losing money. Okay, so a very, very small, I think, SIP of 4,000 rupees can cover a 40 lakhs of loan amount. So just remember these small basic thumb rules that 50, 30, 20 investments. And what investment is? It's, I think, magic of compounding, right? Like you keep investing smaller amounts. There is return on return. Your investment grows in size. Time period, a tenure also takes care of that. Now, this SIP has to be in good instruments in terms of what are those instruments. You have to be very selective in terms of where you're putting. Again, what happened is after 1st of April, the rule is changing. Okay, now there are two instruments in market. When I speak SIP is nothing but mutual fund. Okay, now when I look at mutual fund, there are three type of category of mutual fund that we have today. It's equity linked mutual funds, debt mutual funds, and balanced mutual funds, or treasuries, or whatever you may call. Now, after 1st of April, debt mutual funds, which invest in corporate bonds, government bonds, all of those are going to be treated not as a capital asset, is going to be treated as normal income. So any return that you get on a debt instrument, it will be taxable as an FD interest. Okay, which means 30% slab rate. So if you're going to tax it on slab rate, it's not going to give you the real benefit in terms of taxes, in terms of returns that you're getting from there. Now, if you invest in a balanced fund, which has at least 35% going into an equity market, then in that case, it is taxable as a capital instrument, which means capital gains benefit is available. Which means you'll also get indexation, capital gains tax rates are lower, all of those things. So if you're making an SIP to kind of arbitrage against your home loan interest, deposit in an instrument which is balanced fund or an equity fund. Okay, now I'm not pushing you for an equity fund. That depends on the risk appetite of every person, and you can do your financial planning, consult or all your CAs, or your tax planners, or look into your tax appetite. But it's important to have some risk, as in I'll tell you, the relationship between risk and reward is inverse, like basically directly proportional. Higher the risk, higher the returns. Okay, so I'm not telling you to take unmeasured risk, but some kind of an exposure. If you see that banking stocks are going up, index is going up, very simple. Yeah, you can just invest in the index, right? They're index mutual funds. Just go there and put money out there. Okay, just look at those things, or you can put money in EFTs also. These are instruments that help you balance well and plan your taxes. Uh, so this is for the salaried kind of portion, and whatever investment things I'm speaking about is also relevant to a professional. It's not just relevant to a person who's salaried. All the investment part, home loan planning, tax arbitrage, other kind of investments in instruments, that's also relevant for a professional. So I think it's common all across. So whenever you're planning, it will obviously give you tax saving and some other things that you want to look at. One important aspect for all the categories of taxpayer would be, I think a lot of people are also investing in cryptos. Like if you're dealing in cryptos, just remember to aggregate all the, maybe you're investing through platforms, they give you the kind of taxable income that is there, but remember to pay taxes on that, because government has these informations. So don't say that I may not have disclosed it. It's fine not to do that, because what government is doing today is that they're aggregating a lot of information from these platforms also. Okay, so they know who are the service providers, where you're going to go and do your exchanges on RAM or off RAM, whatever you're doing. So remember, and it's a higher tax rate. It doesn't have a slab benefit. It tax at 30%. There will be tax withholding on that. So basis any which way the tax that has been deducted, there is information automatically with the government. Okay, so you can't do that. One more important thing, a lot of time I've seen people switch jobs. Okay, maybe you were with Infosys, then you change your job, you went to Wipro. Okay, and many times it happens that you don't disclose your income to the new employer that you have, and they give you the slab benefit. But while you file your return, you have to pay taxes on the balance portion, because you have to add both these incomes and then you compute your slab. So always remember, when you're switching jobs, declare the previous income to your new employer, so that when he's calculating the tax withholding, he's calculating it appropriately. Otherwise, what will happen is, while you file your returns and when you aggregate both of these incomes, you'll realize that you have to pay more taxes to the government in terms of advance tax, and it will be a large amount. So whenever you switch jobs, it's only in your interest that you disclose. If you don't, what happens is automatically information is gathered. Like while you go and see your income tax portal 26AS, AIS, the information is there. So all that kind of salary that you're getting, information is captured by the government through the tax withholding and many other things, so that you cannot dodge. So importantly, whenever you're switching jobs, give those relevant information and carry over those things. So this is as far as the salary, I think some high level tips, what you can do and how you can plan stuff. Now I'll move to the professional category. Now it's maybe relevant even for some kind of salaried portion. Supposing you're exceeding maybe 15 lakhs or 20 lakhs of salary, many times I've seen people convert their employment into a professional consulting model if your employer is agreeing to that. Why? How it helps you? You can claim expenses. In salary, you cannot claim expenses. You cannot claim travel. You cannot claim fuel. Maybe some benefits are there because you may have a employer car leasing scheme where you can do that, but most of these employers do not have that. So you can claim your telephone bill. You can claim many other expenses that are available as a professional. Uh, and under the professional category, there is a benefit which is a presumptive taxation that is given to a professional. Okay, so if you're maybe an engineer by profession, okay, and you want to convert your employment into consulting, and you're drawing say 30 lakhs as salary. If you're a professional, on that 30 lakhs, you'll be taxed at only up to 50% of that amount, which means remaining 50% is presumed that you would have spent. You don't have to maintain books of accounts. You have to just mention some certain expenses that you would have. You can always claim car depreciation, many other things, but no questions asked. So this is a very easy scheme that the government has given. Only thing that you should have received 95% of your consideration or the amount that is coming through digital payments or through check payments, which will automatically come in any which way. You'll get payments through NEFT. All your employees will pay you that basis. So you can obviously optimize your taxes if you convert your employment into a professional, but again you lose out the benefit of PF, maybe ESOPs also. Like if you're working for an employment, ESOPs will not be eligible for a consulting model. So if you're working for conventional practices where there are no ESOPs, then certainly that's an option available that you can convert as a freelancer or a consultant and you can claim that. Otherwise, if you're already a professional freelancer, this is a benefit that is automatically available to you up to a threshold of 75 lakhs. That got enhanced just this budget. Like last year it was 50 lakhs. But if you have more than 95% of income coming from digital payments or in check other than in cash, then you can have a kind of an income up to 75 lakhs and pay presumptive taxes only up to the 50% of the amount that you've collected. So this is one benefit that is available to a professional. Similar benefits are available even to businesses. Okay, now supposing you're into a D2C business, you started a very small D2C business and you're not like wanting to raise funds. You want to just do bootstrap and just want to run as a boutique firm. You can do as a partnership firm or as a proprietor. Here again, up to a turnover of 2 crore, you can just declare 6% as your income and then it's fine. So these are small things that you can plan. We can do a separate kind of a session in terms of how do you plan these things, but this is just a high level information that what the government is doing is that for small businesses, they're giving you larger benefits that you don't have to worry about larger tax compliances and planning, and you can do it with small kind of activities out there. But if you're beyond that, then you have to comply with all those things. But any which way, if you're exceeding 20 lakhs and you're a professional, you have to remember you have to take a GST registration number and comply with the GST compliances, which is a monthly or quarterly filings that you have to do, and then do the need basis, whatever is required out there. And now, if you're a professional, one more thing that you need to bear in mind is that there may be tax withholding that your companies are doing to whomever. So if you're consulting, okay, like so in consulting, 10% is a TDS rate that gets deducted. Okay, and while you file your return, maybe your tax is shorter and you have to pay more taxes to the government, remember that you have to pay advance taxes in 4 installments. Okay, there is an installment in June, September, December, and March. So you have to do that. Now, if it's the other way and you're claiming presumptive basis and it's a refund case, then you can claim refund of those taxes also. There is another opportunity. You can also apply for something known as a lower TDS certificate from the income tax so that tax rates are lower. So these are small things that a professional can look at. Now, if you're a consultant or a professional who are doing services or kind of freelancing for corporates, it's important that you register yourself as an MSME, which is a medium and small business enterprise. Why that is important? Two things. Uh, whichever company that you raise an invoice on is required to pay you within 45 days. If they don't pay you, they have to pay you interest three times the PLR, which means 21% interest they have to pay you if they don't pay in time. So it's an automatic benefit. In fact, in the contract, you should mention that 15 days is the tenure. They will have to automatically pay you in that 15 days. If they don't, then there is an interest eligibility. In spite of that, they don't pay you. There's an online portal that you can go and register a complaint that this guy is not paying me. Okay. Automatically, there will be a lot of negative ratings. They'll not be able to take even loans. All those companies are not paying you on time. Okay, so for small businesses, again, thresholds are very high. So all kind of category of businesses will certainly get covered under the MSME. So the first thing everybody should do, apart from the regular GST registration, is also take an MSME registration, which helps you recover faster and there will be lesser disputes. Like even if there's a dispute, MSME, there are special courts that resolve the matter within 6 months. Okay, so there's a fast track resolution available for MSMEs. So this again is a tax planning, not a tax planning, but a more of a business planning while you're entering into a venture and trying to do things. Now, this is also relevant for a startup. It's not only relevant for professionals, but any startups who are doing B2B should also look at MSME registration. Basically, this is something that is very important that people should look at that. So this is for the professional category. Investment part I've already spoken. Out here, two other elements is presumptive taxation and also the MSME benefits if it's B2B. So that's something that you can do. Last aspect, if you want to raise funds, like if there are any people who want to go into a venture of their own and want to raise funds, important is that you start as a private company. Okay, don't start as a proprietor. The reason is you can try it out obviously till the time you've not tested the market. It's important that you try something out and then start a full venture. But uh, all the IPs that you have should belong to a private company. Many times, what I've seen, there are two founders. Okay, they come together independently. They're working on the same idea, and later on it doesn't work out. Both start competing businesses. It becomes very chaotic. Like you are aware of the secrets in terms of how do you want to run a model, becomes too cumbersome to manage, and I don't know who's able to raise funds and what conflict can arise. So it's important if there are two people, start either an LLP or a private limited, have a contract in place, protect the IP to the largest extent that is possible. Okay, because any which way, whenever investors put in money, investors are not going to put in money in an LLP or a partnership. They're going to put in money only in a private limited company. So once you're sure about your idea and you want to conceptualize and actually start working on it, go in for a private company. Okay, it's a very simple process. It doesn't take much time to incorporate a private company. Obviously, there is a lot of management that goes into that, but that again, there are a lot of professionals that can help you out there in terms of the annual compliances and other things. But you should be certain that you're very serious of doing it. Till the time you've not kind of crossed a barrier, don't go in for private. But if you are sure that yes, it's getting traction and you want to raise funds, go in for the private. Even before that, have the right contracts in place so that you're protecting the intellectual property. Like you may employ third parties also in the initial stages, have the NDAs in place. Okay, these all these things will just protect you in case of any kind of infringement at a later date. Okay, copyrights also, if you're doing copyrights, maybe you don't have a venture, you do it in your name, but assign it to the company later on. Okay, when you start your own venture, when there are multiple founders, one thing that I strongly recommend, apart from incorporating a company, is have a founder agreement, even without the investment being there. So these are few things apart. So these are not related to taxes, but these are small things that come along the way. And while you've incorporated a private company, important thing, register your company with the Startup India. That gives you some tax benefits for sure in terms of, and there are three layers of startup benefits that are available. We can obviously do a separate session, but there are certain tax benefits that a Startup India registration also gives you. So these are few things that you can plan along the way. And then while you're starting your business, again, professionals and startups, uh, there is a threshold of 20 lakhs for GST. Like people defer it, say that I don't have a turnover of 20 lakhs, I'd not do GST because there are a lot of compliances. But in the initial stages, what are you losing? You're losing on a lot of input credits, because if you're a GST registered person, You'll get a lot of input credit. You buy a laptop, there is GST that you pay on that. Okay, mobile bill, you pay a GST on that. You take, maybe go to VWorks and work from VWorks, they charge you GST. Now, if you don't have a GST registration, all of these are any which way cost. But if you take a GST registration, you can accumulate all of this, have a credit, and whenever you start your sales, you'll be able to offset it against that. So it's very important that while you're starting businesses, don't look at these threshold things. Immediately take a registration, so that, because initial time you may spend a lot of these amounts. Okay, you may buy for sure you're going to buy a laptop. For sure, you may take a place on rent also for WeWork, okay, anywhere else. So these are smaller things that accumulate all of these credits so that the offset is available. Otherwise, again, those benefits just go along the way, and these things are not readily available. So this will be small tips for anybody who wants to have their own venture: founder agreement, IP protection, GST registration, and startup India registration. So anybody who wants to look at starting their own venture, these are few things that come along the way. Also have an employment agreement. Just last one point for the startups: have an employment agreement even for the founder. Okay, because there could be a lot of things that the founder himself is doing. The IP assignment has to be clearly there. So again, last point, just take care of these things. So I've kind of tried to do a mix of tax planning, maybe structure also, and some pieces of some advices that we've seen a lot of things falter in the wrong way. So I
Yeah.
think for today, I would not, because I think I'm just overshot by 5 minutes, but I would want to, Vishwas, any questions from the audience, any
Yeah,
questions?
yeah, yeah. There are lots of questions that are popping up. I think the first day of financial year has been very good for our viewers and the community members. They have got a lot of ideas on how to save taxes and the investment advices that you give. Particularly, personally, I like the SIP one. That was SIP compared with the
Yeah,
loan.
home loan.
How can you do that? That was brilliant. Matlab, that was something which I also never thought. That was thanks for that. So few of the questions which I have right now are, so one of the guy in our community is a big fan of fantasy league games. So he has a simple basic question that if he wins a lottery or a prize money in a competition, does he need to worry about the taxations? Because there are lots of apps that are popping up
Right.
and the people are not aware of it, how to pay taxes on winning a lottery and basically winning a fantasy game or something like that. So are there any compliances on that?
Yeah, so it is taxable income. It is solely taxable, and from 1st of April, things are changing. For any online money gaming, there'll be a tax withholding. So there'll be
Okay.
a TDS that I think Fantasy League will deduct from today. So if
Okay.
he's playing something, he gets some amount, it will be deducted from. So there was a threshold that also gone. There's no threshold now. Even for 5,000 rupees, there'll be a tax withholding. So
Okay.
automatically, while he wants to file his return, the data will automatically show that he's won something from MPL. This is the amount, and there's a tax withholding out there. And so he
Okay.
has to disclose in his personal returns. So that is taxable.
Okay. And the other question that is coming up is most of the people have asked the same this question, which is very common. Does all sorts of investment, for example, being trading, doing the market tradings and etc., does they have a tax benefit of at all? And if someone has booked a loss in the stock portfolio which they have, so can they
Yes.
avail some tax benefit out of it?
Right. So, see, the capital gains is a separate head of income itself. So, if you have a loss under capital gains, like you're doing market trading and there's a loss situation, it can be set off only against capital gains. It cannot be set off against your salary income.
Okay.
Like, so supposing you got a salary income of 12 lakhs and you've done a market loss of say 1 lakh rupees. That 1 lakh rupees cannot be set off against the salary. You will have to pay taxes on 12 lakhs separately. But if you have a gain of a lakh of rupees, that you can set it off, which means no taxes. Now I'll give you one uh, tax harvesting tip out here. Okay.
Okay.
Now different one. Now 31st March, you realize that there's a loss that you that's a gain that you did. Okay, the gain of say around 10 lakhs rupees.
Hmm.
Okay. Now it's taxable. Okay. Now you have to pay taxes on that. And it's a short-term gain. Short-term gain is taxable. Law market is 15%. So one lakh
Yes.
50,000
Yes.
taxes out there. Okay. But you had certain portfolios which is not doing great. Okay. Then loss making. And you realize that those portfolio are loss making and you got a loss of around 4 lakhs rupees. Book those losses, sell those instruments, whatever you have, book a loss of that 4 lakhs. 10 lakhs you reduce to 6 lakhs. On that, you pay whatever taxes, which means 90,000. So you save that taxes. Immediately the next day, buy those shares.
Yeah. Yeah.
Okay.
That's very smart. Yeah.
Tax harvesting again, nothing more. You're not doing anything. It's tax harvesting. If you want to obviously hedge it, you can do a hedging also. You can do a call put, whatever you want, just to protect so that the price movement is not much. Okay, just protect yourself, do the price movement protection, and then just buy it off. Be careful in terms of when you're doing this because markets are fluctuating and all of that. But this is something that you can plan. But again, losses can be set off. Capital gains is taxable. If it is long term, then it's 10%, short term 15%. So these are a few things that you have to bear in mind. losses can be set off and it can be carried forward also. Supposing you have a loss and you don't have a gain this year, you can carry it forward and you can set it off in future.
Okay, okay. Yeah, so one more question that is popping up is how are ESOPs taxed for an individual? Are they taxed in a, how are actually they taxed? Yeah.
Yeah, so there are three stages of an ESOP. In fact, four. Indian context, there are four stages. One, when you join an employment, is an offer letter that says that you're eligible for an ESOP. So no tax on the eligibility.
Okay,
When you join the company, after maybe few months, they give you the grant letter. Okay, these are the number of ESOPs that have been granted to you.
okay,
No tax on even the granting. Third position is vesting. Okay, there's a vesting schedule which is linked to your employment. Maybe 4 year vesting. Commonly, it's 4 year vesting. Monthly vesting can happen after a cliff and all of that. While the vesting is happening, no tax on vesting also. So no issues. But whenever you exercise these shares, whenever you say that I want to convert these options to shares, whenever you exercise, there will be a tax in the year of exercise. Okay. Now, how do you do that? Is, and many times you have to read your ESOP plan also and your grant letter. Read it very carefully because most of the companies have, like when you leave a company, they have a window of 90 days to exercise. Okay. And if you don't exercise, it lapses. But when you exercise, you have to pay taxes. So you have to take a conscious call that while I'm leaving the company and there's a 90-day window that I'm supposed to exercise, whether the startup is going to do great or not, or if it's a listed entity, whether the share price is going to increase or not. Then take a conscious call of exercising it, but you'll have to pay taxes on that. Now, your employer will also not allow you to exercise without payment of taxes.
hmm.
There's a tax withholding out there.
Okay,
And if even if so, I've seen a lot of companies have ESOPs from foreign companies also. Like many companies are cross border, they are US parent and India subsidiary, and then the ESOPs of a foreign company is given to the Indian employee. There are no taxes in the US. The taxes are to be paid in the country where the employee is residing, which is India.
okay,
All the taxes, even on foreign ESOPs, will be paid in India. Okay. Now there are certain rules that defer the option of paying taxes on exercise by 5 year period. Okay, that's only for eligible startups. Now, if you're working for an eligible startup, now there are very few eligible startups in India. Okay, there are more than 70,000 startups that are registered with the DIPP, but only 1,000 of them have the Startup India eligibility certificate. So if you're working for those 1,000 companies, in the year of exercise, you will not have taxes because it's deferred by 5 years, or there's a liquidity event, whichever is earlier, there'll be tax at that point in time. But a normal company, wherever you're working, taxes arises in the year of exercise.
okay. Okay, and yeah, so that's thanks for that. And after, that's another question that's popping is ki if someone has paid a TDS on his employment income, does he need to pay any extra taxes, or there can be unseen taxes that might come in his income tax portal while he's filing it out?
Yeah. So if he's a professional, again, just giving you an example, simple. If he's a professional and tax has been withheld, there can be possibility of additional taxes also coming along the way. Okay, because it may have that. It could be a combination that he's got some export income on which tax is not deducted and some domestic income on which tax is deducted. And if the combination, giving a classic example, supposing he had 30 lakhs of income. Okay. On that 30 lakhs, maybe on 15 lakhs, there was a tax withholding of 1,50,000. Okay. Rest 15 lakh, there was no tax withholding.
Okay,
Now, and he was presumptive taxation, which means he claimed 50% benefit and came down to 15 lakhs of rupees, which means you're calculating taxes on 15 lakhs of rupees. On that 15 lakhs of rupees, assuming minusing all the benefits that you're getting, the tax is say 2 lakhs rupees. And the tax withholding is only 1 lakh 50, which means the 50,000 balance you have to pay taxes to the government. And this will be in advance taxes. So that's why the part that I said there can be advance taxes also. You have to plan your taxes accordingly, that if there are advance taxes, you have to preempt it and pay it in advance over the 4 installments that you have. Otherwise, there is interest consequences on that. For salaried people, you don't have to worry about your taxes once you've declared your income and that's the only income that you have from the employer and there are no other income, there'll be no taxes. But if you have other income, like classic case, like if you have investment income from capital gains, okay, your employer doesn't know capital gains. So you have to pay taxes on that. Okay. If you have income from FD interest, your employer doesn't know that. So there will be taxes additionally on those interest income. So if you're salaried or professional, you have to aggregate your income and just don't look at what is deducted. Calculate your taxes basis the income, and there are a lot of tools that are available that give you that option of calculating taxes on ongoing basis, and then plan your taxes and payments accordingly.
okay. So we would be having last one question. Just a question that people are asking are ki what's the benefit of going well while filing taxes, getting a consultation from a professional CA. What could be the benefit of out of it a person can take, because many people don't realize what's the benefit of taking a consultation with a CA before filing returns could be. I believe most of them have realized it till now, but yeah, just a small brief on it.
Yeah, see, people can do their self taxes also. I've seen people do that, but I think many times people miss out certain things. See, what the government is trying to do, the government is trying to automate many things. Like they want to click off a button, you'll be able to aggregate most of the income. Like, so if you're just a salaried income less than 7 lakhs, you don't have to worry because all your taxes are calculated correctly. But you may miss out on maybe your crypto income, your capital gains income. Are there any structuring like the tax harvesting rule that I said? Now,
Yes.
all these tips can be done only if you're going to a CA as a professional. These are smaller aspects, and like the professional thing, like many times there is an option that you can convert an employment into professional also. Why not? So these are things that if you go to a professional or a person who's aware of these aspects, he can help you better. Okay. Or even for like, so I'll tell you, if people are doing FNO, okay, now FNO is a separate segment altogether and there are complicated taxes for that. Okay. Now, how do you plan those things? What do you declare? What is the kind of income that is there? Okay. How do you, and even cryptos, like cryptos also is a different devil that you have to manage. If there are losses in cryptos, what do you do with that?
Yes.
Government is saying it's not allowed. Okay, you can't claim a set off. But then if you have an income of that crypto in the same year, can you do that? Okay, so these are things that you have to worry about and then take care of that. And many times, you know what happens? Even cross-border investment is allowed. Like you can go to platforms like say In Money or Grow and buy shares of a US company also. You can buy Amazon also. You have to declare this in your return. If you don't, there are different consequences because it's a foreign asset not declared in your income. It's a problem. Now and there are a lot of situations that it may happen that just send for a small stint to a overseas country. Maybe your employer has sent you to on an L1 to US and you come back. Now you have a foreign bank account. Have you declared it in your return of income? If not, there are serious consequences of non-declaring of foreign bank accounts. So these are things that maybe awareness is very lack of awareness is there. Now all these things are very specific and peculiar in nature, and that is why you may need a tax professional to do all of these things for you. And it can happen that you have income from other countries also. Okay, there are treaty reliefs that you can claim. Now how do you do that? Now till the time you don't consult a professional, you'll not be able to know even that.
Yeah.
So these are
Uh, thanks. With this amazing answer, I think we can conclude the session. Thank you, Mr. Lalit Valecha, for guiding us in the ideal ways to be a pro in managing our taxes. And I'm sure that the first new day of the financial year have been good for our community members and their friends and families. Everyone has learned something new today. I think they could implement to save more. It was an utmost pleasure, sir, for hosting you and having a conversation with you. Uh, for the community members, we would be having more sessions in the future. So please stay tuned to our community and download the app. And thanks, sir. Thank you for your precious time and thanks.
Thank you, Vishwas. Thank you, everyone. Take care.
Thank you. Thank you, everyone. Thanks.